Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NETDRAGON interim report. NETDRAGON Websoft Holdings Limited offers a diverse range of businesses and services, including online and mobile games for kids such as Jumpstart, School of Dragons, Neopets, World of Madagascar, and Math Blaster. Other online games like Udemons Online, Conquer Online, Way of the Five, and adventure navigation licensing and servicing developed games, sales of education hardware and software products. The recent surge in NETDRAGON's stock price can be attributed to several key developments. A significant strategic cooperation agreement with Puking Group, signed on September 17 and 24, 2025, has been a major contributor to the company's growth. This partnership aims to accelerate the implementation of AI technology in educational scenarios, aligning with NETDRAGON's dual strategy of AI plus gaming and AI plus education. The announcement of financial results for fiscal year 2024 on March 26, 2025, also reported a notable increase in profit before tax and final dividend. These positive developments have collectively contributed to the company's stock price increase of over 32.67% within the past year. The primary drivers of revenue growth or decline can be summarized into the following key points. Revenue growth is primarily driven by gaming and application services, which saw a significant increase in revenue with a plus 47.4% YoY growth in 2025 first half. The MindAI business, which experienced a substantial growth of plus 44.8% YoY in 2025 first half and a 30% increase in revenue to RMB 641 million. Successful IPs such as Evergreen Flagship IP Udemons and Conquer IP, which led to sustained growth in user engagement and solid progress in overseas expansion. Revenue decline is primarily driven by economic uncertainty, which caused a minus 45.7% YoY decline in the MindAI business due to declines in customer spending. Industry-wide softening throughout most of our key geographic markets, leading to a minus 18.1% YoY decline in gaming and application services. Increased tariffs, which also contributed to revenue decline. These factors highlight the importance of adapting to market conditions and managing risks to maintain revenue growth. Net income and profit margins experienced significant changes in the given period. Net income decreased by 92.5% year-over-year, YoY, to RMB 30 million, indicating a substantial decline. However, when comparing the first half of 2025 to the same period in 2024, net income dropped by only 27.2%, suggesting some stabilization. Profit margins also underwent changes. On a YoY basis, profit margins increased by 2.9 percentage points to 69.5% due to reduced operating expenses and an impairment loss of intangible assets. However, within the company's segments, profit margins decreased. In gaming and application services from 87.2% to 86.2%, and in MindAI services business from 29.7% to 25.4%. The reasons behind these changes are multifaceted. External factors such as tariffs and softening demand negatively impacted the MindAI business, leading to decreased profit margins. On the other hand, efforts to streamline operations resulted in reduced operating expenses, contributing to increased profit margins on a YoY basis. The company's financial performance indicates a decline in its ability to generate positive operating cash flow. The operating cash flow for the year 2025 was a significant loss of 751 million RMB, as stated on page 41. Furthermore, the status of the operating cash flow is classified as negative, as mentioned on page 75. This suggests that the company is struggling to produce sufficient cash from its core operations, posing a challenge to its financial stability and growth prospects. The company's debt level and interest expenses have undergone significant changes. According to the correct information, bank borrowings have decreased by RMB 526 million from RMB 2,255 million in 2024 to RMB 1,729 million in 2025. This reduction is a positive trend for the company. In terms of interest expenses, there has been a notable decrease. Interest expense on bank borrowings has dropped by RMB 8 million from RMB 26 million in 2024 to RMB 18 million in 2025. Additionally, interest expense on convertible and exchangeable bonds and convertible note has decreased by RMB 7 million from RMB 48 million in 2024 to RMB 41 million in 2025. Overall, the company's debt level and interest expenses have shown a downward trend, indicating improved financial health. The company's financial performance varied across different segments. The gaming and application services, education segment, and AI content factory were the standout performers, with notable increases in profitability and efficiency. In contrast, the MindAI services business struggled, experiencing declines in revenue, gross profit, and core segmental profits, making it a poorly performing region. Management is confident in the company's long-term growth and value creation potential. They are embracing the AI era through a dual-focus strategy, combining AI with gaming and education sectors. The company is focusing on core projects and prioritizing shareholder returns through dividend payments and share repurchases. By positioning itself at the forefront of frontier technologies such as AI, XR, robotics, and blockchain, MindAI aims to thrive despite industry-wide challenges. A strategic collaboration with an institutional investor in the Greater China education sector further underscores the company's commitment to innovation and growth. The company has a history of paying dividends to its shareholders. In recent years, it has declared both final and interim dividends. For the year 2024, a final dividend of HKD 0.5 per share was paid, while in 2025, an interim dividend of HKD 0.5 per share was also distributed. That concludes the financial summary for NETDRAGON. Feel free to comment below, and I will be happy to answer them when possible.